I'm looking up and I'm saying hello. Ladies and gentlemen, welcome back to this breakout session. We're going to start in just a few minutes. I am going to insist, honestly, I don't mind being a badass. I'm going to insist that anybody that's in the back in here, please do come forward, even if it's just a couple of rows, because this is going to be a much smaller session. We've got other rooms. So if you're sitting at the back, you ladies there, sorry, I'm picking on you. But please do. Yes, you ladies over there, please, can we get up? Please, thank you. Lovely. Thank you very much indeed. Anyone that's sitting at the back there, please do move forward. I will just explain, I do this for a living. I go and MC at events all over the world, and there's nothing worse than empty seats in the front rows. It's really, really kind of the worst thing that you want to see. So we're going to be getting underway in just a moment. As you come in, please head towards the front here. Nobody's going to bite, I promise. But do just come and take a seat further forward so that you can actually see everybody on the stage, and I stop asking everyone to come forward. I'm going to also ask, can I ask the gentleman on this side? Let's get a little bit of a concise group over here. Go on. Extra muffin for anybody that will comply. I promise. That's it. I know they've got muffins at lunchtime. That's it. That's perfect. All right. There's some ladies at the back there. Do come in. No, they're not quite sure whether this is the room that they want to be in. Do come in and take a seat. That's it. We're going to get going in just a moment. You're amazing. Thank you very much indeed. Gents, I'm just asking everyone to come on this side. Is that all right? I don't want to get you to get too comfortable. That's it. And come forward. Don't even sit. That's it. Keep coming. Keep coming. Come to me. Come to me. Oh, yeah. Okay. Yeah. You're in. Fair enough. Definitely coming to me. All right, ladies and gentlemen, 2 seconds and we're going to get going. So ladies and gentlemen, welcome back to our breakout session here in the Grandmaster Suite. I have to say, it's been a phenomenal, just while we've got people coming in. Do come towards the front, not allowed to sit at the back. Making it a rule now. Someone's going to come up to me at lunchtime and say, wow, you're really mean. But hasn't it, that's forward, that's it, come forward. I have to say, it's been an amazing morning. Somebody came up to me just during the break and commented on the quality of those keynotes that we had this morning and how powerful they were, and they really have been. Do come and join us. Just shuffle your way down towards the front. That's why no one's sitting at the back. Thank you very much indeed. So before we head into this breakout session that we're about to start, welcome ladies and gentlemen. Do come and find yourselves a seat towards the front. Thank you very much. This is the future of asset management, bridging traditional investments and crypto. I'm really excited about this. But to get us underway, I'm going to ask guest Nez Ozkan, Strategic Partnerships Manager, Europe, Rudik, to come and set the scene with a keynote. Thank you very much indeed. Can we have a round of applause, ladies and gentlemen? Enthusiasm. Thank you.
Hello everyone, good morning. My name is Nez Özkan. Today we will be discussing about the future of asset management, bridging traditional investments with crypto. But first of all, I would like to thank FinanceMalta for bringing such professionals here, forward-thinking professionals here to discuss about this exciting topic. In the next 10 minutes, we will speak about the digital assets, crypto ETFs, tokenized funds, and then we will discuss how investing in those assets impact portfolio construction. Then we will briefly touch about the regulations as well. Well, we are in a very pivotal moment at the future of asset management. Currently, digital assets are reshaping institutional portfolios. Once considered as niche or speculative assets, now they became to Main Street, they get involved in the mainstream investments. And asset managers should need to rethink about portfolio construction, regulation, and the client engagement. Before we jump into the details, let's rebrush our minds and what are different types of digital assets. Well, cryptocurrencies. As we all know, cryptocurrencies are decentralized digital currencies secured by cryptography. And Bitcoin and Ethereum is leading the $3 trillion market. Stablecoins. What are stablecoins? As it can be understood from its name, those are the cryptocurrencies pegged by stable assets like USD or Euro. And stable currencies are pretty important because the thing is, they are the bridge between traditional finance and digital assets. CBDCs, we won't be speaking much about CBDCs in this panel, but they are the central bank issued currencies which combine digital efficiency with central bank trust. And tokenized RWAs, which is my favorite, they are real-world assets converted to blockchain tokens. And we will discuss about the benefits of tokenized assets in the upcoming presentation, also in the panel. Well, let's zoom in the asset management industry. What happened in this year? By mid-2025, we've seen the total asset under management was around $147 trillion. And the institutional investors say 85% of them are planning to increase their digital asset allocations in their portfolios. And within that group, nearly 60% will expect to allocate more than 5% asset under management to crypto and digital assets. So we can say that we're seeing a traditional boundaries between digital assets and traditional investments are now eroding. And this is what expert calls the great convergence. With the product innovation out there, with the regulatory support with MiCAR and MiFID II, and also with the current macro pressures that we're seeing in the world, there is a great convergence among these different type of assets. So, let's speak about the digital assets in general again. As we said, they went from niche to mainstream. And we are seeing an accelerating institutional adoptions. So the digital assets, currently they're widely recognized as a legitimate asset class in global finance. Nearly 3/4 of the institutional investors, as mentioned, they plan to increase digital asset allocations in 2025. And what are the key adoption drivers? Well, first things first, we are seeing a clearer regulatory framework which signals permanence across the globe. And we are seeing a growing client exposure for the digital assets. And then, out there in the market, there are institutional-grade infrastructures and custody solutions. And which is a very good sign, but major firms are now reversing their earlier skepticism about digital assets. And as I mentioned, market infrastructure is maturing, and this is pretty important for the market. We are seeing professional-grade institutional exchanges, which are heavily regulated in Europe, also in US. Custody services out there, they are securing a bank grade, they are giving a bank grade security solutions, protecting digital assets and the investors. And out there in the market, we are seeing a growing number of analytics platforms for credit rating of tokenized assets or for digital assets, and we are seeing risk management tools for portfolio construction. The ecosystem transformation now makes it safer and more practical to allocate institutional capital to cryptos and digital assets in general. Now, let's deep dive into crypto ETF. And well, crypto ETFs provide investors with a traditional financial instrument to invest in cryptocurrencies without having directly to buy and custody them. And this is pretty important because this is the bridge between traditional and digital markets. As of October 2025, global asset under management for crypto ETFs, it was around $25 billion. And BlackRock is leading the market with its iShare Bitcoin Trust. However, there is a flip side of this coin. If you're following the news in the last couple of weeks, we have seen nearly $2 billion outflow in crypto ETFs. And this is due to the US government shutdown, it was prolonged, and of course the current market rates with the Feds moving very slowly with cutting the interest rates, it impacts, of course, crypto ETFs. So even though we will say digital assets, cryptos are a bit uncorrelated with traditional markets, of course, macroeconomic pressures affect the markets. And this is a very brief milestone regarding the adoption of crypto ETFs. In 2023, Europe literally knocked the door with launching crypto ETFs. And then in early 2024, US comes into the room. And by the mid-2024, BlackRock launched its famous Bitcoin iShares. And in the late 2024, we are seeing other cryptocurrencies like Ethereum is having crypto ETFs. Then, we will briefly speak about what tokenization is and why people are calling it as the next frontier. So, tokenization, it went from pilot to to production. Tokenization has evolved now beyond the experiment. As we said, nearly 60% of the surveyed asset managers in the market, they are planning to launch their tokenized fund in 1 to 5 years. And what are the benefits of tokenization? Well, first thing first, faster settlement and lower operational cost. We don't need to wait T+1 or T+2 when we are liquidating those funds. What we call this near instant or atomic settlements, and this is a huge and transformative benefit of tokenization. And the other thing is, with the lowering operational cost, we see in a fractional ownership opportunity out there because the investment minimums are getting lower every other day. The other thing is, we can see, even though it's still early and premature, we are seeing an enhanced liquidity and transparency for investors with the tokenization. The other important point is, with tokenization, we are having a programmable compliance and KYC and automated redemption and subscription of funds. And the most important thing is portfolio diversification benefits that tokenization can bring us. The portfolio diversification with the digital assets out there, when we are seeing the surveys, we know that low correlation is literally happening with investing in digital assets. And the other important thing is, even a fraction of investment in digital assets into current portfolios, we get better enhanced returns and improved Sharpe ratios. And when we are checking the performance data of, let's say, S&P 500 with Bitcoin returns, of course, in the overall market, we are getting a better risk adjustment returns. But there is a critical consideration. Of course, digital assets, they're still highly volatile. And when we are investing in those assets, we really need to be still very careful. And the regulatory landscape, let's briefly touch about it. In Europe, we are leading the market with MiCAR and MiFID because tokenized assets fall under MiFID II, not MiCAR. And with Europe, in the last 2 years, US is also stepping into the room again with establishing Clarity and Genius Acts for tokenized securities and for stable coins. And we are also witnessing an Asia-Pacific innovation by them having pilot projects like Project Agora and Guardian, which is around cross-border tokenized settlements. Before we conclude our presentation, I would like to grab your attention, and we would like to ask how we can navigate this digital transformation. Well, we should embrace innovation pragmatically. Asset managers, financial institutions, and fintech companies must definitely participate in sandbox or pilot digital asset initiatives. And the other thing is, as the first step to get into this market, we can start using regulated getaways like crypto ETFs or tokenized real-world assets into our portfolio. And the most important thing is, we should definitely build internal expertise. To conclude this presentation, I must say we should seize the opportunity there. The future of asset management will be defined by innovation, collaboration, and prudent risk management. Digital assets are permanent, adaptability is super essential, and we can find success through balance. And to conclude this presentation, I would like to give a brief quote from Larry Fink of BlackRock. And what he says, we are just at the beginning of tokenization of all assets, from real estate to equities, the bonds across the board. I would like to thank you for your attention, and if you have further questions, please feel free to connect me on LinkedIn. Thank you.
Thank you very much for this introduction. And I would like to thank you all for joining us for this brief background on cryptocurrency and traditional assets. I would also like to invite my fellow panelists here on the stage.
I think that was mine.
No, the third one.
I was no worries.
So welcome, and thank you for accepting the invite of FinanceMalta to be here with us. Just a brief background about myself, and then I will let everyone introduce themselves. I'm Elaine. I come from AQA Capital. AQA is a UCITS management company and an alternative investment fund manager. So we authorize funds, retail, and also professional ones.
Hello, my name is Nes. I'm Strategic Partnership Manager at Rudik. We are a tokenization company. I'm also associate at Digital Euro Association. And as I mentioned, I'm pretty interested with tokenized real-world assets. So it would be a great panel, I guess.
I'm Daniele Bernardi, founder and CEO of Diamond Partners. It's a super manco here in Malta. We are focusing on creating crypto for our strategies, but also for third-party strategies. And we can create a UCITS and alternative investment fund either.
Hi everyone, I'm Pedro Noronha. I run Nostra Capital. It's a Maltese-based hedge fund. We actually run 2 hedge funds. I believe this year we were the first Maltese-based asset manager to win the Euro Hedge Awards. We're nominated for 4 more this year, and we were one of the first traditional hedge funds to embrace Bitcoin.
Perfect, yeah. Hello everyone, great to be here. My name is Volker. I'm working for KPMG Switzerland, where I lead the asset management practice from a consulting point of view, where we have 3 main offerings, so regulatory, operation, and technology topics. Before I was always working in the industry, and I actually started in Malta 2012, so I kept the connection. And yeah, great to be here with you today.
I am Fabio Frontini. I'm the Group CEO of Abraxa Capital, and I'm a director of ECA Fund SICAV here in Malta. We are a self-managed SICAV that sub-delegates the investment management activity to Abraxa Capital Management. We are the largest open-ended hedge fund in crypto. We manage about $4 billion at the moment. And we started in 2018 here in Malta with a license. And yeah, that's about it.
Very good. So we have around 40 minutes for this breakout session. I will leave the last 5 minutes for you, the audience, to raise any questions that you may have. But let me start immediately by opening this discussion with some general questions just to set the scene. So we heard where you're coming from. So from your standpoint, how do you see the convergence of traditional assets, traditional financial assets, and digital assets to evolve in the next 3 to 5 years? Volker would like to start.
Yeah, pleasure. I think because I'm from Switzerland, I think it would be good if I give you a little bit an overview on the Swiss market. So I think cryptocurrencies, but also tokenized assets are the most relevant digital assets. And when we look at cryptocurrencies, there are 3 ways how Swiss investors invest into cryptocurrencies. So one relates to exchange-traded products, which is kind of a debt instrument, but then of course also direct investments as well as funds actually. So it's possible to set up a fund in Switzerland which invests into crypto assets. And I think the first 2 are certainly the most relevant classes, I would say, meaning from a volume point of view, exchange-traded products, but also direct investments are most relevant. And if we look at tokenized assets, there was actually a recent study from the University of Lucerne which showed that 102 assets have been tokenized in Switzerland. 31 of them are traded, and they focus mainly on equity and debt instruments. And also worth noting, I think that UBS actually tokenized an investment fund, but it was not in Switzerland, but it was in Asia. But certainly a good development. And I think when I look personally at the cryptocurrency space, I think in the short and medium term, probably performance will be a key role, so that potentially drops would be used to get new exposure or additional exposure. But it's certainly understood that it is an important asset class in Switzerland, cryptocurrencies. And on the tokenized asset side, I think it's worth highlighting that, as we also just have seen, it's kind of still the very start. So I was in Brussels last week or the week before at a pharma conference where also some global figures have been shown, and we see kind of that real world assets make up around 1,500 trillion and only 0.1 trillion are tokenized currently. Similar picture on fiat money and the stable coins, what we just heard. I think, we are just at the beginning, and that should further increase. And I think, so as you know, Switzerland developed the framework quite early. So I think that gave us an advantage in relation to digital assets. But of course, competition is keeping up and bringing competition to the market.
Definitely. Fabio.
Yeah, no, I totally agree, and I think obviously the intersection between tokenization and tokenization, traditional assets and crypto assets is something we cannot stop, obviously, because as was mentioned before in the presentation, they are more transparent, is faster settlement, is obviously a better technology than what we are using at the moment. So there is no way in which this process is going to stop. Is going slower than everybody probably here was expecting in the last few years, and probably is going to be slower than we expecting for the next 3 or 4 years, because there are obviously some caveats and some things that needs to be put in place to protect specifically retail investor, etc. Because there is advantage that is transparent, is fast, etc., but also sometimes is it could be, I don't want to say dangerous, but it could be quite, it could be, there are transactions that are not reversible, actually, let's put it this way. Now, blockchain is immutable, etc., we all know. So there are aspects that needs to be still addressed, and also the system as it is now, we will have to change. It's a bit, I think, like, in the late 1990s when email arrived and, the new technology arrived. I remember I was sitting in a bank and they told me, okay, from now on we use the email or something. I don't even remember anymore. And I was like, this is never going to take off. 6 years later, you had the one or you are dead. Now, I'm not saying it's going to be that fast, to be honest. I think it's going to be a lot slow because there are a lot of implications in terms of, employment, social issue that this new technology is going to improve because it is clearly more efficient. There is no way in which anybody can disagree on this one. And so everything needs to be managed properly. And but I think we all agree that there is no way back here.
Definitely. Daniele?
I came in Malta in 2017 as a great believer of blockchain technologies, hoping to tokenize managed account and funds too much early. And in very few time I understood that there is no way to push the people to own a wallet and own their own asset without a secure wallet and very easy to use. So I understood that the convergence between finance and crypto is more traditional product like ETF, like a hedge fund, active management certificate to invest safely in digital asset. And the number is clear for now. There is around, I suppose, 300 trillion between ETF and hedge fund that expose the people to the digital asset, and there is only less than 100 billion in tokenized real-world assets. So actually, is the contrary. Is the traditional finance that are trying to simplify the access to the digital asset. But for sure, in the future, will be the opposite. But we need a lot of effort from the regulation point of view, the technological point of view. So we need to improve a lot. But I agree totally with Fabio that will be the future. So.
And it's also a matter of educating the general public about this new asset classes and the things that are coming up. Ness, what
exactly, exactly. I agree with you. And like the market for the tokenized assets is, as you said, just $30 billion. Now we're seeing more adoption in terms of stable coins. And again, stable coins are pretty important because that will set the rails for the next payments wave. And we know that Gen Z and the Asia Pacific, they're holding a lot of stable coin reserves. And this is pretty important with the adoption and with the investments of tokenized assets in the next future. And another perspective, again, in the idea of infrastructure, we are still observing how banks, asset managers can implement tokenization into their current system. And I'm a bit more optimistic, even though the pace is pretty slow, but we're seeing more and more regulated institutions, like, for example, Dubai's land registry. They can now tokenize real land deeds in their blockchain ecosystem. So in that regards, what I believe in the upcoming years, let's say, maybe 3 years is still too early, but we will see traditional finance will be running on these tokenized assets. Like even crypto ETFs are now getting tokenized with BlackRock. And as far as I know, HSBC is also tokenizing deposits. So in my opinion, we will see the adoption further and further every other year.
So based on what we have discussed, Volker, I go back to you. What are the key factors that you think are hindering or accelerating this convergence?
Okay, yeah, no, it's a very good question. And I think like as indicated, so Switzerland is kind of in a good position, but of course there are things to be mentioned in relation to that. Actually, a little bit maybe pessimistic was like a recent study published where 150 wealth managers in Switzerland were asked, and they came to the conclusion that crypto is kind of the most overvalued asset currently. So that was recent, and of course taking like the current prices into account. But also when we look at Switzerland, like it's interesting to see that 1.1 million Swiss investors invest into cryptocurrencies, which is like significantly high. I think only Portugal and the Netherlands have more investors investing into cryptocurrency from a relative point of view. But I think, as also indicated before, it would be good to kind of increase awareness about this asset class, because partially it's still within a bubble, even though it's bigger in a way. So awareness has been raised, but maybe it would be worth to raise additional awareness. I think that's one point. And also when we look at the Swiss institutional investors, there's an interesting picture where we see basically that family offices already invested quite a large number into cryptocurrencies. There's also a tendency that this will increase. On the asset management side, so we have some asset managers already investing into cryptocurrencies. Also like a slight tendency that it should increase. But on the other side, Swiss pension funds do not really invest into cryptocurrencies, might be also in relation to regulatory topics. But that is something, worth mentioning. And then just, I think, in relation to tokenization, I think it's important to note that basically, so tokenization is just the first step, but like technology itself does not solve basically liquidity topics and so on, also what we heard before. And of course, there's also like a little bit like an off-chain, on-chain mismatch, meaning that like if real estate, for instance, is tokenized, but still like the land register might be not tokenized or on a blockchain. So that is something to take into account. And then, of course, like for financial institutions, the implementation costs are potentially considered high. So it's kind of the question, is there an advantage to move now where there's not like a lot of liquidity? So it's like a pro and con kind of to take into account when moving now. And maybe just one final note. So in Switzerland, we also have a consolidation currently on stable coins. So also, even though Switzerland kind of moved early, still regulatory changes are relevant and have to be taken into account.
Yeah. Daniele, would like to add something?
Yes. I believe that anyone in the room can agree that the internet was a great revolution for the humanity, you know. But if we return back to 2007, not all the population were using internet. Was when Apple invented the smartphone that make accessible internet to everyone very easily, fast. I just open the mobile phone and connected to internet, no? So nowadays, no one can stay without internet. And I suppose that is the same issue that we have now in the crypto asset space, in the tokenization world, and so on. We need a wallet that is trustable, very secure, and with a very easily user interface. When we will arrive, like the phone is, you know, when someone will find, and there is the technology, it's just a question of time, find an hackable wallet that can use very easily, then we can expect that there is a switch between traditional asset and the digitalization of the asset. So, from my point of view, it's more a technological issue. But not only, Because, for example, I can just theoretically buy a house with a smart contract nowadays. It's very simple. And is more secure than a notary like is needed in Italian that is very costly, very slow. I can basically switch a house and the certificate of the ownership of the house in second with the blockchain, you know. But of course, we need that the regulation take effort on this and allow us to make this. So we need a technological improvement and also regulatory improvement to make it happen.
Definitely. So now I would like to move more on the actual product themselves. And this is something that the next question might be simple question for many of us, but it's something that Pedro also raised. Terminology that can confuse the general public, Pedro. What's the difference between cryptocurrency and Bitcoin?
Quite different, to be honest. I don't know the level of sophistication in crypto assets of the audience, so I'm going to try to keep it simple. But if there's one thing that I would like to keep from what I'm going to tell you today, is that Bitcoin is not crypto. I'm going to say that again. Bitcoin is not crypto. Bitcoin is the revolution. Bitcoin is the invention of decentralized money. Never in humankind we had decentralized money. There was always a central authority. Other digital assets are at best copycats. You know, Bitcoin is trustless. It's permissionless. As Fabio was saying, it's immutable. It's actually the only blockchain that is immutable. Because, I mean, Ethereum, when there was a hack, they reversed the blocks so that they would eliminate the hack. How can we trust a central authority that we don't know? I don't. I mean, why am I going to trust some developers somewhere in the world that developed something that is what we call decentralized in name only at Nostr, when you have one asset that is the true revolution in the system? So if I have to trust someone, why am I not? I'd rather trust JP Morgan, Goldman, Citi, you know, they've been around, they're big institutions. I mean, because what makes Bitcoin Bitcoin is the fact that it's a decentralized ledger. Nobody controls it. Whereas any other ledger that any other crypto has, either has a foundation or a huge stakeholder whose primary incentive to build that was to get rich. So there's another particularity about Bitcoin that I don't think is the same for other cryptos, is that nobody can kill Bitcoin. I mean, that's not theoretically true. You could kill Bitcoin, but you'd have to do two things simultaneously. One, you'd have to kill the idea of Bitcoin that people like me and many others who understand it deeply have. And two, you need to switch off the global internet. I think we can agree that both of those things are unlikely to happen. So why don't most people get this? Why do people still believe that there's other cryptos? I mean, it's very simple, greed. You know, like most people, they're looking for the Bitcoin they missed. You know, they want the 10,000x return that's going to change their life. I much rather stay with an asset that I know that in the next 10, 15 years is still going to do 100x with 80% probability than looking for an asset that's going to give me 10,000x with 0.01% probability. I mean, and why don't people get this? I think that the answer is quite easy, is most investors are lazy. They're just rehashing what they read in the Financial Times or in CNBC or whatever about crypto. They don't understand it. They haven't done the work. So the one advice I leave you here today is it takes 100 hours to understand Bitcoin. Everybody gets Bitcoin at the price they deserve. So when will you do those 100 hours? It's up to you. Now, I'm not saying that I don't believe in tokenization and so on. You know, I think tokenization makes a lot of sense and will happen. I just don't think it will happen using Ethereum or Solana or something else. Because why would the New York Stock Exchange or the Deutsche Börse or whatever just roll up and let them take their business? They won't. And given there's a central authority behind Ethereum, Solana, and any other crypto other than Bitcoin, I mean, I'd trust Deutsche Börse or NYSE over anybody.
I agree. May I say that I agree entirely what he just said? He couldn't have said it better, to be honest. He could not have said it better.
So it really wasn't a simple question.
But yeah, no,
Yes, but for me,
yeah.
Bitcoin network will be the place where the industry will
They are
the
working.
tokenized asset.
Yeah, they are
Bitcoin network will be, from my point of view, the blockchain where the I mean, if I am Jeff Bezos, I would be Jeff Bezos. I will be created the Amazon coin in Bitcoin network, not in Ethereum network.
Of course.
So will take time, but for me, Bitcoin network is still in the game of the tokenized future, you know?
Yes, if I may just quickly add, regarding, everybody's looking for the Bitcoin, it's just pure speculation, all the other coins, etc., which I agree entirely. But it's a gigantic exercise where greed is actually showing how traditional finance will be transformed in the future. Using greed and people trying to get rich, etc., they're experimenting everything: lending platform, borrowing platform, restaking, all this kind of stuff. Everything that goes on where people are making money, and where we are making money, everybody here is probably making money out of it, is just a gigantic experiment to show that the traditional finance will move there. How will it move there? On the Bitcoin chain, they will create like the central bank chain, God knows what chain. Each government will have its own chain, I don't know. But it's something that is fascinating to see, and etc. But it remains full of risk, and this is why it's going to move slowly. And we go back to what we said before, because central authority is difficult to understand. Actually, Bitcoin is very simple to understand if people take the time to understand it. I mean, it doesn't take that long, to be honest. But everything else, it takes time for people to focus and say, okay, this is good. How do we implement it, etc., etc. And this is why it will take time.
So Nes, how are traditional investment products being adapted to include tokenization and also cryptocurrency?
Very good question, Elaine. Well, of course, we're witnessing money market funds, tokenized treasuries, and private credit getting tokenized. These three assets are the mainstream right now. And US treasuries are tokenized, and it gets bigger and bigger every other day. But the other types of assets like commodities, real estate, they're also pretty important in this ecosystem because of the mentioned benefits that tokenization that gives to the market. And to add one point to Pedro's, and even though everything is on the Ethereum level right now, we are seeing now new companies advocating the same mindset with having a decentralized structure behind tokenization. So there is several Luxembourg companies doing Bitcoin tokenization via Bitcoin. However, the interoperability is still an issue with tokenization. That's why many companies, they follow Solana and Ethereum network. And in terms of the traditional financial products that we are witnessing, probably in the next 3 to 5 years, we will see more US or let's say government bonds are getting tokenized. Investment funds, alternative investment funds will be getting tokenized. But in the upcoming years, that will be more real estate out there. And now people this is a very interesting example, but there are vineyards tokenizing their assets because they want to get international attraction and also in investment. I live in Spain. I'm speaking with people with different industries, let's say. They're pretty interested in tokenizing their traditional assets as well.
Very interesting. Volker, I don't know whether you have anything to add on this one.
Yeah, maybe just quickly. So I think institutional demand kind of is noted, family offices, asset managers, and a little bit pension funds is the current picture in Switzerland. What I found actually interesting is that exchange-traded products and direct investments into cryptos can be done by retail investors, whereas the Swiss investment fund available can only be for qualified investors, which kind of is a little bit odd because it's, for me, kind of the most regulated type. So you have a management company, an asset manager, custodian, and so on. So that is an interesting picture, but that is how it's currently structured in Switzerland.
Moving on to product, the actual product, Daniele and Fabio were one of the first in Malta to launch a fund investing in cryptocurrency, actually. So I'm sure you faced difficulties, I'm sure you faced additional scrutiny around it. How did you manage to overcome these?
I start.
Yes.
But to be honest, I mean, I think, I really like Malta, I have to be honest, and this is the reason why I'm here. And I think here there is less prejudgment on things compared to other places. I'm talking back into 2017 and 2018, as a matter of fact. And people are actually more keen, like to sit down and look. And have a look, make sense, etc., and then we do it. So generally speaking, yes, it's more an educational exercise more than actually, banging against the wall, like it happened to me with a couple of central banks to try to explain something to them, but it didn't work. It's more like, even the regulator here is more open to understand, to look, but really look, put the hands on the computer and see what happens, etc. And it is changed a lot over the last few years. They created group of people that have more expertise, and the fact that people like me, like Daniele, that have companies here, and we have, constant interaction with the regulator, made this a place where actually people can probably strive and actually open up new businesses, etc., and finding the proper humus to actually properly set up a business that is specialized in digital asset, blockchain, or whatever, depending on how you want to call it, actually what we're doing. So yeah, we were the first ones to do it, alongside the other people, and it was, but like I would assume in any other jurisdiction would be probably more difficult actually. So Malta was, from my point of view, from my experience, was pretty good, I have to admit.
Yes, I came in Malta because it was the only one jurisdiction in Europe that has a law. So I like to make business in a regular way, not in a shadow way. And I find the Malta authorities very open-minded and very open to learn, to understand. Of course, keeping carefully the decision about what they can do or we can do or not. But I sat in MFSA meeting room with the decision maker to find a solution. It was the first time in my life that I could do that, because I had a SICAV in Luxembourg for 13 years, and I never met anyone of CSSF to discuss about anything, So when I arrive in Malta, I can find a solution. Because to set up a crypto fund is not easy. You have to take care of custody, you have to take care of fund administrator, auditor, that no one wants to audit at the beginning. Now it's more simple. So there is a lot of issue to take care, problem to take care. But I fall in love of Malta for this reason, because you can do business knowing that the authority is proactive with you and not against you. Yes. From the standpoint of view. And yes, in other country, unfortunately, it's very difficult to do that.
And I think it's not only when you did this some years back, but also nowadays, from our side, it doesn't make a difference for us whether we launch the fund in Malta, and Luxembourg, in Ireland, in our jurisdiction. But when it comes to cryptocurrency fund, we find it easier to launch the fund for our promoters in Malta. Why? Because the regulator is more open to discussion, is more open to feedback from the industry. And Daniele, you touched a very good point when it comes to audit. We touched on the product innovation, now we need to see the other side of the spectrum. Risk management, audit, governance, something that obviously is heavy talk. Volker, you come from KPMG. From a risk management and audit standpoint, what are the biggest challenges in managing and evaluating cryptocurrency?
Mm-hmm. Oh, yeah, a very good question. Maybe I should add a little disclaimer that I'm actually working for KPMG, but not in audit. But I can provide some general insights in relation to risk management and aspects taken into account. Of course, like market risk, we discussed already liquidity before, something highly relevant, but also the AML, KYC, transaction monitoring side, which might be more complex and a little bit more risky potentially. But also when we look like at the global scale of regulatory developments, potential uncertainties, even though like MiCA, of course, was a good thing for Europe to have like a harmonized framework. But there are, potential differences across jurisdictions, and also taking cross-border business into account that must be monitored in an appropriate way. And then, more general risks such as reputation risk, operational risk is highly relevant. And I think overall, what is important, like that firms implement like a good risk framework, a good governance framework to take like this, digital assets into account, especially when they move first time, but of course also keep up with regulation and implemented it accordingly.
Yes, and Fabio, we have a real case example with you. You manage a multi-billion fund investing in cryptocurrency. How did you build up your internal governance to be able to oversee this asset?
Well, let's put it this way. We started always with, we were in traditional asset manager before, so we had already the idea of how you actually manage. Actually it was not billion funds, but it was pretty close to it. So we had an idea of what we wanted actually. When we approached the space and with help of the Maltese regulator actually that gave us the license, etc., the whole idea behind was to create a proper institutional grade structure from the beginning. And to do that, obviously, you need to invest in compliance, organizational infrastructure, risk, and all these kind of things that goes. But it's not any different from any other funds. People think, okay, you do a crypto fund, you go on chain, you create a wallet, you do whatever. At the beginning, I have to be honest, it was a bit of a far west when we entered because also multi-sig wallet didn't exist. It's like when DeFi arrived in 2020. It was impossible even to touch. From a point of view, we used your competitor PwC as auditor actually at the beginning, I remember. And when I mentioned to them, do you think we can actually touch decentralized finance and still get a clean audit at the end? There was no answer for a week, and then somebody came out and say, impossible. It's like, because also the control, the risk, the AML, transaction monitoring, it was something completely new. Forward now, everything is a lot simpler because the tools, alongside, as I said before, the crypto mayhem, all these tokens, this experiment, people trying to get rich, people trying to get the next 10,000x in the next 1 year or 6 months or whatever, there is a lot of infrastructure built up. Monitoring, transaction monitoring, prevention of hacking, a lot of new technology, the good of the technology and service providers that are in place on which auditors and other external service providers that are there from a regulatory point of view to make sure that people like us, we don't run away with the money, have the tools now and have the support of our external companies that can actually help them to do the job. So yes, it's challenging because unfortunately somebody thinks, okay, I'll create a crypto fund and I do it with 2 people. It's not going to work. Well, you can do it, but you're never going to grow more than probably 10 million of friends and family. If you want to create an institutional grade business like we are doing now, you have to invest a lot in the proper infrastructure. Because I think when the institutional money will come, because it's not there yet, the first thing that we look is not only performance, because we can get performance in private credit, in long short equity or whatever. They will have to go in digital asset space because it's an asset class that we cannot miss eventually for the next few years. But they need a proper infrastructure. They will have operational due diligence that is going to be. You have to be up to a standard, otherwise they're not gonna put any money, and we're still gonna be sitting here and just saying, with not small, but let's say compared to the scale of traditional finance, the amount of hedge fund and alternative management in crypto is ridiculously small, and there is a reason because the organization and the infrastructure for how funds are set up is not prop up to the standard yet.
Very good, and we also touched another important point, which is the regulation. Daniele, I know that I'm going to touch a very touchy point for you.
Open wound.
Yes, an open wound, exactly. So Daniele launched his first UCITS fund that invests in cryptocurrency. The UCITS fund, once you have the stamp of a UCITS fund, you have the ability to market the fund across Europe. You have actually the right to market this fund across Europe. Daniele, when he tried to market his fund in other jurisdictions, he found closed doors. So can you walk us through your experience and how you dealt with the MFSA, with ESMA, which is the European regulator? And based on all this, how do you see the future of digital assets for retail investors?
A very good question. So I had a question years ago. Why a person can purchase Bitcoin directly, or even worse, to take, many worse, take a contract for difference, can purchase a perpetual future 100x and lose money in seconds, and cannot have an investment through a regulated fund, the best in class that is UCITS around the world, with the risk management, with the professional management, and so on. No? And I make this question to the MFSA, and I went there with a proposal, with a legal opinion from Ganado, here in Malta.
Free advertisement.
And other...
Free advertisement.
Free advertisement, yes. With another law firm in Italy, and so on, and also another legal opinion, 3 legal opinions we went from Germany, that any one of these legal opinion was saying that the ATPs are transferable securities, and the UCITS is undertake collective investment in transferable securities. So why I cannot invest through ATPs in crypto? And we discussed with MFSA, and they say it's true. It's better for the retail investor to have an exposure with a retail fund, despite derivatives and so on. And we set up the fund. We launched the fund. And then when we go through our partner, that is Azimut Group, to distribute this in Italy, after 1 month, Consob read the newspaper that we launched the first UCITS fund in the world, and basically overreacted, and asked to MFSA to stop the marketing momentaneously. But for 1 year and a half, to make it very short, we discussed before with Consob and MFSA to find a solution, but Consob doesn't want to find a solution. We went to ESMA to negotiate a solution. At the end, at least we have the opportunity to put the 10% in the trash ratio of the UCITS fund, the ATPs related to crypto asset. But from my point of view, is a mess. Is missing the opportunity for the industry to provide a regulated way to access to this market, because this market is very volatile, has a lot of risk involved. You cannot pretend that the people take a private key and manage correctly, you know. So a regulated fund is a lot better. So I hope that in the future we will be able. The MFSA make also a document of 70 pages that distributed to all the authorities in Europe, trying to convince them that a UCITS fund can use ATPs, because ATPs in gold is eligible. ATPs in crypto is not eligible. Why? There is no real reason to deny this. No? So I hope that in the future the ESMA will change their mind, or maybe better the European Commission change their mind, that they are the ones that put the law in practice. You know.
It's also a matter of regulatory convergence. So even though we are all in the European Union, the way that legislation is being implemented in different jurisdictions is different, which is not fair to the players that are in the market.
Yes.
So Volker, on this thing, are you seeing any best practices being applied in different jurisdictions?
Yeah.
From regulators, I mean.
Mm-hmm. No, I think I already noted quite a lot on Switzerland, but maybe just to add shortly. So Switzerland clearly aims, and it shouldn't be too much marketing for Switzerland now, but clearly aims to be like a global hub for tokenized finance. So the developments we saw early clearly helped, as noted. Be like a trusted jurisdiction for digital assets. That's also one priority of Switzerland. And I think like when I look generally at the Swiss regulation, I think like the regulatory model is different than Europe, meaning that they try to be open for innovation, but still protecting investors. Similar like what we heard like today and yesterday, like what the MFSA is doing in a way, but probably from a different point of view. So I think that is worth noting, and I guess as we are actually quite proud to have developed like a market infrastructure regulated, which allows actually to tokenize assets, as noted at the very beginning of the panel. So I think that is very good. But also to note, like regulatory developments are still on the way. So I mentioned the stablecoin review and consultation. But also when we look at the market in general, like the players on the market, liquidity is certainly a topic which has to be taken into account. And of course, we are not part of the European Union, so market access is a problem in a way. So yeah, might be an option to set up something in Malta to have like the European access for Swiss firms, of course. And I think, yeah, also others pick up. So Malta did, I think, a great job over recent years in the digital asset space.
Very good. I see that we have the red timer coming up, so I'm going to run through quick questions. Nes, what are your institution clients asking when it comes to tokenization? Is it about opportunities? Is it about compliance?
Actually, all of them. Compliance and infrastructure, it comes first. When you're approaching to any financial institution or asset manager, they first ask who the custody will be. The custody should be handled as like a self-custody, or should we work with a bank? And of course, like as this market is still premature, let's say, I always suggest working with a bank as the custody. And the second thing is, who will handle KYC and AML? Because these are real-world assets, they are tokenized, they are going on digital tokens, but how are we going to secure the clients in terms of knowing your business and also knowing your investors? This is also a very important issue. And the other thing is, again, regarding with infrastructure and compliance, they are asking us, like which blockchain should we run? Is it either Ethereum or something else? And the other most important thing is, of course, how are they going to integrate the current tokenization system into their legacy systems? In that scenario, like in our product, let's say, we try to have a more UX UI friendly, like Web 2.5 friendly product, so any asset manager or bank can easily start implementing tokenization and see if it has a benefit or not. So that's one thing. And the other thing is, of course, the opportunity there. Do they need global access for their funds? Do they need operational cost, or maybe they want to bring further liquidity with the global access? We start examining the opportunities regarding the tokenization of the, let's say, the assets.
Very good. Pedro, I have last question for you. If you had to advise a traditional asset manager who is taking the first steps into digital world, what would those advice be?
First, learn about Bitcoin, study it. And then once you've understood it, I think the first step makes sense is to maybe buy a Bitcoin ETF. I personally prefer the Fidelity one rather than the BlackRock. I know the BlackRock is the biggest one, but Fidelity have been Bitcoiners for way longer, and they don't custody along with everybody else at Coinbase, which, pardon my English, is a shitcoin factory. So I think Fidelity is way superior ETF. And then eventually, once they understand what Bitcoin is, to do the step to convert to own proper layer 1 Bitcoin. Because if you're outsourcing the self-sovereignty to an institution, you're missing out on the biggest gift that Bitcoin was for civilization, which is self-sovereignty. You can be your own bank.
Very good. I don't know whether the other panelists have anything to add on this, and if we have any questions from the audience. Joe. conflict of interest.
Two interventions of Volker, if I may call you with your first name. Essentially, it would seem that there is jurisdictional arbitrage, a case of jurisdictional arbitrage between what Switzerland can do or what operators in Switzerland can effectively do with the rest of Europe. How do I'm referring to all of the speakers, I mean, whoever wants to answer to this. Is it a question that the European Union provides greater investor protection, or are our rules within the European Union a hindrance for further development, innovation, in order that would enable us catch up with Switzerland? And if that is the case, shouldn't we, on the European Union side, be lobbying with the EU regulators in order to ensure that whatever hindrances there are in our regulations are effectively addressed in order to enable us catch up with the rest of them?
Okay, perfect. Yeah, thank you very much. No, I think like if you look at Switzerland, of course, being outside of the European Union, I think also regulatory processes are less complex and potentially also quicker, depending on which act you look, where like the model is really to provide innovation while still like taking care of investor protection. So that is a key concept, I would say. And like Swiss firms usually, operate in Switzerland, of course, but where relevant in relation to market access considerations would then also set up European hubs to have access to the wider European market, basically. And I think, like, generally, like international cooperation, exchanges between regulators is key. So I think that is something also to take into account, to just meet and talk about regulation and cooperate basically on also a global level, basically.
Yes, definitely. I think this one also hit the nail in the head in the case of Daniele head, which EU regulations, we are all based on the UCITS directive. The interpretation of one regulator is totally different from the other. Any other questions?
First of all, thank you for mentioning FBTC, because I invest in it. My question is, first of all, I would like to make a statement. I think tokenizing bonds in Malta specifically would be a very positive thing. I work in investment brokerage, and most of our clients invest in bonds. The problem I see with it, me specifically, because I'm still a student, I don't have much capital as much as they do, obviously. You have a minimum amount you need to have to actually invest in bonds. Tokenizing bonds would make it maybe easier for retail investors to enter inside that market and have a stable income from that investment. How are we in the future, in Malta specifically, in tokenizing bonds?
I don't know if this is something that you can
Yeah,
give an overview of.
Exactly, like
Give ideas.
Of course. So we are seeing more examples of like tokenizing government bonds, or let's say corporate bonds in US and also in Europe. And given the Malta scenario, I truly believe there's a huge potential here. Like given the corporate, let's say, investment funds that we are seeing here, the ecosystem here, it's like a true advocate of digital assets. So I truly believe there is a strong potential in Malta with the tokenization of government bonds, or let's say corporate bonds. And as you said, of course, having an accredited investor or retail investor, these two things, they require different prospectus. But in US, I think it was, I keep giving an example from BlackRock. I don't remember exactly, but one of the major players out there, they can now, like, they tokenize the short-term government yields, let's say, and retail investors can actively participate, starting from like something like, I don't remember, maybe $1,000 per se, I don't remember exactly, but it is a huge benefit for any retail investor out there who needs to earn, let's say, steady fixed income from tokenizing those bonds. So yeah.
Can I just add a simple thing? You said you work at a brokerage, right? Well, I think tokenized assets are going to eliminate brokerages because they're going to allow people to go straight. So, sorry?
Why won't the brokerages adopt the tokenization?
I didn't hear it.
Why won't the brokerages adopt the tokenization themselves?
They will, but if you can message other people who have that bond without using the broker is the centralized party who knows who owns each bond, right?
Yes, okay.
So you in Malta, you will know where the Maltese bonds of a certain issuer are placed. So that's your value, is that if you know someone is looking for those bonds, you know someone who might be able to sell them or might be willing to sell them at a price. With tokenized, if I can message every token holder, hey guys, I want to buy it at 98 cents, anybody wants? Flag me.
That's why it's beneficial as well. It's a sword from it cuts from both ends. Obviously, business-wise.
Yeah, we're going from the yellow pages to the internet.
Yeah, exactly.
In brokerages as well.
Definitely. So. I would like to add. I'm so sorry. Just one thing. Like Pedro, I agree with your opinion. But the thing is now. We still kind of need the broker dealers out there because we are kind of using their license to distribute the bonds. But maybe in the upcoming future, if we can secure as, let's say, tokenization firms or banks, they already have the licenses, maybe we may not need broker dealers out.
It's like Uber still needs the drivers, but robo-taxis are coming.
Exactly.
Unfortunately, our time is up by more than 3 minutes. Thank you very much for all of you who have attended. Thank you for your contributions. And if you have any further questions, you can meet us around, especially downstairs. Thank you.
Thank you
very much.
Ladies and gentlemen, I just want to echo that and do find these folk downstairs because now it is lunchtime. And before you leave, everyone's going to leave before I get to say this. Please, we will continue. Everything is going to happen back in here at 1:30. Please do make sure that after lunch hour you're back.
I'm Giovanni Cunti, the CEO Europe of Gate. We set our operations here in Malta in 2018, and since there we've been steadily growing. We acquired our VFA license. After that, we acquired our MiCA license literally in the last few months, and this is where we are going to plan to run all our operations for Europe. Why Malta? Malta provides everything in one place. They were the first one to provide a crypto-friendly environment back in 2018. There was all surrounding services, ancillary support that grew with us in time. A regulator really looking to help us to engage, to challenge, and all ancillary services that could allow us to grow here. I encourage everyone to come here to Malta. This is the place where you want to run your crypto business. Thank you very much to FinanceMalta for the opportunity. It's entities like that that will help the growth of this country.